It's a Tuesday, the 18th of August. This is Frontier Opening Bell. I am Bosun Namfayi. Welcome everyone to this show, bringing you the best of Pan-African financial news and markets. Let me introduce you today to Ijeoma Onyeka, who is the industrial goods analyst at Vertiva Capital Management here in Lagos. Morning, IJ.
Morning, Bosun. It's a pleasure to be here.
Good to see you. And of course, you know too well Ali Kansachu, who is the founder and CEO at Rich Frontiers Management. Wherever he is on the planet, he's always on this show. Good morning, Ali.
Morning, boss. Always a pleasure. Thank you.
Thank you. Okay, so let's go to the market again. Starting the third week on Monday for across the African markets were a little bit mixed in terms of on the equity side. Nigeria, a stock market down about 0.25%. That's the inflation for July came out. Ivory Coast BRVM down by 0.5%. Egyptian market 0.2% in the green territory. The Kenyan market gave the biggest jump among the big five exchanges on the continent, 1.50% booking. And South Africa GSC 0.63% positive. The rand also got a bit of a climb on the US dollar as well as the Kenyan shilling. The dollar index this morning, 92.61. The euro up on the dollar about 1.19%, and the pound touched a new 131.58 against the greenback. So, and gold, of course, by the way, is back at $2,000 per ounce. That's some good news. But let's talk about Kenya Central Bank. Says it saved 11 billion shillings in first half to meet risks that will emanate from the loan defaults. A similar story from Kenya Commercial Bank yesterday says $101.5 million has been set aside for the first half credit risk within the Kenyan market. Meantime, Kenyan startup WorkPay has raised $2.1 million in seed fund for its growth. Umeme Limited reported 64% drop in profit after tax. That's in Uganda. Meantime, the Uganda shilling was firmer 3,705 against the dollar. That's according to the Ministry of Finance. Ali, good morning. Let's start with the story around the Kenya Central Bank.
So yes, this is provisioning. Obviously, there's been a significant uplift in provisioning, and we've been able to see that around the first half results. You spoke about KCB this morning. Equity Bank, which is iconic bank led by Dr. James Mwangi, also reported results just before the market opened. And a similar story there, a 773.4% year-on-year rise in loan loss provision expenses and non-performing loans. The gross non-performing loans number is something around over 40 billion shillings. So pretty significant, but they seem to have it well managed because the net NPL figure was quite low. So I think they've got good collateral. But this is a story we're seeing across the continent at the moment. We've had this COVID slowdown, which has hurt the banks. And the issue, I think, really for most investors is what's the longevity of this slowdown? When does one see an uptick and an upturn? There's some glimmers of hope here. The level 2 move in South Africa. We're hoping in Kenya we can start to see a flattening out and then a turn higher. But I think, for the more cautious investors, you're going to have to tread very carefully and look for those stronger banks, the likes of which are probably equity, from what I could see in those results. WorkPay, interesting business, $2.1 million raise, speaking to the digital economy, the vibrancy around that in this year. WorkPay does payrolls for online payrolls for companies, a very attractive business, lots of customers. And I think that's a significant statement that they were able to cash raise in the current market circumstances. Umeme, the Ugandan electricity utility company, notwithstanding a minus 64% drop, Boasson, these were actually quite reasonable results. It's well managed and it's doing significantly better than its neighbor here in Kenya, Kenya Power. Uganda shilling a little bit firmer. Uganda has had very strong coffee exports this year, strong agricultural economy. We've spoken about how agricultural economies are doing much, much better in this downturn this year. And I think you're seeing that response in the shilling is reflecting that outperformance of agri-based economies at the moment, particularly because they keep food prices low, inflation stays low, and the currency retains its value.
I totally agree with you, Ali. Again, one story trend that is emerging is how agro-based economies within Africa are beginning to outpace other commodity-driven, such the hydrocarbon guys, which basically Nigeria, Angola, and the rest of them. And we're seeing that even with the figures we're getting from Nigeria's consumer goods, those within the agri sector, that story is looking really good. That means that we could really do more. Yesterday, I was encouraged by Kenya's story about how horticulture and remittance is helping the country's FX inflows. Ijoma, just a second, look at the Nigerian story. Again, yesterday, the AFCFTA was in Ghana, the opening of the secretariat was a big story there, a multi-layer, nice building that was dedicated and handed over to the African Union. Nigeria's inflation, however, was a big story on this side of the border, 12.82%. Food inflation heading to 15.5%. Flaming's earnings was good. Cote d'Ivoire is listing some bonds today, 5.9%, 10-year paper, and another 7-year, 5.8%. Ghana's fiscal deficit is expected to dip to 9.4% of GDP, according to the Minister of Finance. And Ghana's First National Bank gets $10 million loan for SMEs financing from the FinFund. That's the fund belonging to the Finnish government. IJ, let's talk about Nigeria's inflation, really.
Okay. Oh, okay. Yeah. So we saw Nigeria's July inflation report come out yesterday. It went up to 12.8%. Which is the highest we've seen in almost 2 years now. It's a very significant rise and mostly cost push driven. It basically underscores the impact of the devaluation and the pandemic driven cost increases across the different sectors. We saw food inflation rise to 15.8% yesterday, which is the highest that it has been in 25 months. Even the month-on-month increase at 1.4% is the highest that we've seen in quite a while. And the drivers are right on the nose. The devaluation that we're seeing, mobility issues that we've been seeing since even after the lockdowns had eased, we're still feeling the pressure from all these, and we are still, for some reason, we are still seeing the impact of the border closure on food prices. Core inflation, while not rising significantly, was also impacted, especially with housing, water, and gas prices across. But mostly the impact on the push on Nigeria's inflation has largely been cost push driven, like what we've been saying, over the years, and we expect that to continue for the rest of the year. We expect inflation, average inflation for 2020 to come in 1.3 percentage points higher than it did last year at 12.6%.
Great. Okay, just 1 minute quickly. We'll talk about the industrial goods and agriculture and some of the earnings from the Nigeria space. Again, we haven't seen the numbers from the big banks as we have seen from Kenya, for example, from Standard Chartered Holdings in Kenya, from Equity Bank, from KCB, from Cooperative Bank. The big banks in Nigeria are yet to report: UBA, Zenith, Access, and GT Bank. So the market is on what's going on. Today is the 18th of August, and we don't have their second quarter ended June. We don't have the half-year report yet. But according to UBA yesterday, noticed to the market that the numbers, the papers are with the Central Bank of Nigeria. So it looks like the Central Bank is taking a bit more time to look into their books this period, in particular with the loan restructuring, I guess, that they had to do during the period. I'm sure the central bank wants to be sure that everything is in place. And of course, the FX adjustment that we saw between May and June, I'm sure the central bank will also want to see how the banks also keep the books very tidy and neat and proper before they are released to the market. This will be very, very key. Well, maybe you understand that from the angle of the regulator. Look at the Southern African market. The GSE is still the king as far as equities markets concerned on the continent, with a whole lot of derivatives as well. So give it to the GSE when it comes to the numbers. But again, you look at the rand level yesterday, the markets moved up in line with the level 2 lockdown easing. But the problem with Sasol, the energy giant, is yet to go away. We're issuing a rights issue of 2 billion shares in second quarter next year. The company reported not very disappointing numbers for the second quarter in billions of dollars. The debt level is still there, by the way. Meantime, South Africa's treasury, the development bank and others signing 100 billion rand deal for infrastructure. And one good story from Zimbabwe, Ali. The commission, the stock exchange, their commission, a dedicated 40 kVA solar plant dedicated to the stock exchange there.
So, Boson, let me start with the Zimbabwe story because there's plenty going on there. You know, there was a SADC meeting which completely did not mention recent events which have been going on, where you've seen a number of civil rights activists in prison. There's been a lot of stress in Harare, talk of a falling out between President Mnangagwa and his deputy, Chiwenga, and a lot of political disturbance is emanating from there. We had a very high inflation print in the 800 percent. So a lot of pressure is built, but this is a good news story. Alternative energy being utilized for the stock exchange. Of course, we were discussing the fact that the stock exchange was shut down a few weeks ago for a few weeks, but has reopened, minus, of course, its most iconic listing, which was Old Mutual, where they're trying to list that at the Victoria Falls Exchange, but I'm not sure what recent developments we've had around that. To touch on your other stories, the Rand, yes, we saw a little rally, then we saw it back up. It remains in the 1740 type area. I think it's going to be tough for it to make a lot of headway at the moment. Emerging market and frontier market currencies remain under pressure, even against the dollar, which has been weak versus the G7 currencies. Sasol, well, it's been a sea of red, hasn't it, for Sasol? And it will be an important litmus test whether investors are going to pony up $2 billion to support the restructuring of that balance sheet. I think it's obviously they're going to lean heavily on local institutions and pension funds, but that will be an important test for liquidity and for market appetite when that comes through. And then the 100 billion Rand infrastructure fund. This is President Ramaphosa's big ticket idea, which is to go large on an infrastructure spend in order to spend his way out of this recession that they've been in now for more than 5 years, frankly. So that's an interesting development. It confirms that he's getting his ducks in a row, and that, you know, South Africa, for any other African, has pretty 21st century infrastructure, but the South Africans themselves think it needs a lot of upgrading. And I think, you know, this is a clever idea to get that economy motoring again, spend on roads, etc., particularly electricity as well, which has been a thorn in the side of the South African government and businesses.
Again, when you look at energy and the problem with the energy utility giant Eskom, Ali, I'm sure, yes, South Africa has a good number of roads compared to Nigeria, by the way. So I'm sure the comparisons, if you look at the streets of Joburg, whatever, you won't find as many potholes and very horrible roads like you find in the city of Lagos, for example. So That is understandable. So where do you think South Africa should be spending infrastructure money right now, Ali?
So clearly, boss, and they've had an issue with load shedding. That this is the most industrialized African economy. If you don't have sufficient power, you're not even on the pitch. You're on the subs bench. So I think they've really got to look at. They've got a lot of plans. They just haven't implemented them. So I think the first issue is around power. They've got a huge opportunity in green energy, which they already have a plan for, but they haven't deployed. I think roads is a no-brainer. It's an easy multiplier. I think they can put more roads in as well. But, I think they've also got other infrastructure spending to do, and this is in line with the ANC mandate. So things like schools, if you can spend a lot of money there to help your workforce, which is your key human resource, those are the bits of low-hanging fruit I would look at. And if they're going to put money to work in the parastatal sector, they really need to get their corporate governance right, because that's been the Achilles heel of South Africa since about 2009. There's just a complete lack of corporate governance. That's why you've seen so many big parastatals fail.
It's because sometimes it's very difficult to try to understand that after Nelson Mandela, how does the South African parastatals get to this kind of a level at which there's a problem one after the other? Sasol, Eskom, South African Airways, and the rest. You just can't understand how they're getting into this kind of mess. Nigeria's case is understandable. It's been like that for several decades. So let's talk about we'll talk about Northern Africa. Just a quick one, but let's get Ijeoma, give us a second there. Let's talk North Africa. Egypt is still remain in the news for every good reason, of course. The unemployment, however, now heading to 10%. That was at the end of second quarter. Meantime, the central bank issued 9.25 billion pounds, Egyptian pounds and treasury bills on Monday. And for CaixaBank of Morocco, for its SMEs, the European Bank for Reconstruction and Development pumped 430 million dirham loan into that. And of course, we all know the tourism sector in the water as well as aviation globally. Tourism in Tunisia down 21.6%. Ali will speak to this for a minute or two, but let me get Ijeoma's views about what more do you think we can do here in Nigeria, looking at the earnings that we're seeing from flour mills, from northern Nigerian flour mills, companies that whose operations are related to agriculture and all that?
Well, yeah, okay. I'll say that there's a lot that we can do. There's a lot that has been plaguing. There's a lot of issues plaguing the agriculture sector, but none more so than infrastructural deficiencies. Across the agriculture value chain, even in terms of crop production, our mechanization rate is very, very poor. It's over 80% of our arable lands are being farmed by smallholder farmers. Mechanization rates quite low. Fertilizer utilization rate one of the lowest in sub-Saharan Africa. Not even speaking about global averages. So there's quite a bit that we can do outside of crop production. Crop storage is one area where we have not improved in a while. We've had the export aggregation companies like Ace Foods and the others come in to sort of solve these problems, but to mitigate these problems. But even then, the scale at which this is being solved is quite small. Then you talk of agricultural transportation and all. There's a lot that needs to be done. The government, I would say, has rightly placed the focus on agriculture. As you mentioned earlier, food is quite a defensive sector. Even when economies will be going down, demand for food does not go down, and so we've been seeing the agricultural dependent economies continue to thrive even despite the pandemic. However, in Nigeria, we still have some ways to go. But speaking of the flour mills results, we did see them, consolidate their strong full year performance in the first quarter of their 2020-2021 fiscal year. Basically, we saw top line grow both year on year and quarter on quarter, and it was mostly driven by their feeds and fertilizer business, which expanded by 37% expanded by 37% quarter on quarter. Their packaged foods business and their sugar business, interestingly, declined quarter on quarter, about 5% quarter on quarter and 10% quarter on quarter. And this is surprising because we had expected their packaged foods business to improve because they've been launching some new value brands into the business, smaller size and value brands, and we expected that would catch with the declining consumer wallets that we've been seeing as aggregate income levels have fallen due to the pandemic. We had expected the new value brands to sort of catch the down-tiering, consumers down-tiering. However, we've seen that they have still been losing revenue, but the growth from
I like the feed and fertilizer business side that you talked about, because when you break down the earnings, you find out that to get feed and fertilizer business up and running from the flour mill side, it means there are consumers on the other side, those who are using them for farming, for agriculture. So I think that is good news when we see that, because that means the outlook and all being done in agriculture seems to be biting somehow at some point. But again, it's news we'll continue to unpack. Ali, where are you on the North African story?
So let me just first of all start with the unemployment rate, 9.6% in Egypt.
Egypt.
This is interesting. If you compare it actually to Nigeria or Kenya or South Africa, it's considerably better. In other African countries, we're well into double digits, in some cases in the 20% mark. South Africa, it's been an intractable problem. So one of the trade-offs with having quite a repressive government in Egypt is, of course, this relatively a good employment rate. Unemployment 9.6% in the comparison does not look as bad. The interesting story about EBRD, we've touched on them recently. This was set up as the European Bank of Reconstruction and Development to redevelop Eastern Europe, but increasingly has been looking at the North African space. They've reached out to Algeria as well. So we should keep an eye on these guys, because they're obviously putting a little bit of cash to work in the northern area of the continent. Tunisia down over 21% tourism. COVID has been a circuit breaker for tourism. We know about that. Obviously, Tunisia is not as bad as Mauritius, where we've had this oil spill, which has been a complete nightmare for them. But I think, the first places to bounce in the tourism front will be those North African countries, which are closer to Europe and are well known to the European market. So, this might well be the bottom for Tunisia, as long as their numbers stay under control. And finally, just to say that that Egypt looks to me still, as I said yesterday, the most attractive carry trade at the moment on the continent with the least FX risk.
Interesting how the unemployment numbers are looking in across Africa, like you rightly put it, Ali. 30% in South Africa, Nigeria 27%, not significantly far from 30%, by the way. Then you look at Egypt at 9%, that's way, way below the big names or the big boys within the continent space. I think that's well said. Thank you to both of you. We appreciate your contributions to Frontier Opening Bell this Tuesday. Thank you so much, Ali Kansachu at Rich Frontiers Management. Thank you. We appreciate your time. And Ijeoma Onyeka at Vertiva Capital Management. Let's leave it there for today. We'll continue tomorrow, Wednesday, the 19th of August. Bye for now. Have a great day, everyone.